Well, as 2019 is beginning, Wall Street is continuing the trend of the end of 2018, which is going down. Prices of securities are dropping, and then, as some of you may have noticed, particularly in America, what we call volatility is present. So stocks drop 900 points and they rise 600 points or something like that. So what's going on with Wall Street? Well, I've been thinking, and I've suggested in one of our commentaries, that what's going on is market prices are reacting to changing circumstances. There are two things which are of significance which are changing. One is it looks like the Federal Reserve Bank is going to raise interest rates. It's already started to raise interest rates, not by any huge amount. Nothing gets even up to 3% anymore. Some of us in the United States may remember when interest was 15% in the early 80s, right? So we've been very, very lucky, if you will, of having cheap money. One consequence of that is that the upper class, which can get a hold of a lot of money and can invest it in speculation, they've done very well over the last 10, 15 years, whereas the middle class and lower class who rely on savings haven't done very well at all. I mean, so what kind of savings do you get at 1.5%, 2% a year? Who would even want to save? Why not just spend your money? So the bias there of this cheap money has been to favor the wealthy and to disfavor the middle class and the lower class. So the Fed is changing on that, which is going to increase the price of money, which means it'll be more expensive to invest in stocks and other financial instruments, so they're being repriced down in order to reflect the higher cost of money. And this is rational, this makes sense. The second force, I would argue, driving repricing down is increased uncertainty in the world. Political risks, trade war risks, too much debt almost everywhere you look. How long can that be continued? Angry middle classes in Europe, in the United States, in Brazil, an unsettled situation in the Middle East again. And what uncertainty does so uncertainty means there's greater risk associated with the future. If your returns are going to stay the same, but your risk goes up, then that means your expected value goes down. Returns are not expected to go up to become commensurate with new risk. So markets have to digest this, and what they're saying, I think, is things are not going to be going up higher and higher and higher all the time. There's too much risk, too much uncertainty in too many places. So the prices are going to come down and probably stay down for a while until the risks either change or they're reduced because of better policies and better actions, and the price of money gets adjusted to. And then I think the markets will stabilize in about 6 months.